Hello everyone. Today I want to share on irrecoverable dates and the accounting entries required. To begin with, if a business sells goods on cash basis, is that business going to experience irrecoverable dates? No, that's correct. They only experience irrecoverable dates when they sell on credit basis, right? That's correct. So let's look at this example, right? We have January 1, sold goods to James, 300. January 10, James pays 250. January 18, James failed to pay the outstanding amount. Okay. So let's start with James's account. When goods are sold to James, James is the receiver, right? So where are we supposed to record the 300? Correct, on debit side. So we are going to say sales 300. Then on January 10, James pays 250. So what is going to happen here? Yes, that's correct. The 250 is going to reduce the amount of 300 on the debit side. So we record on the credit side. Cash 250. Then we are told that James failed to pay the outstanding balance on the 18th of January. So we are going to record this amount on which side? Debit or credit? And what are we supposed to write? Right? We are supposed to record on the credit side. It was supposed to be our closing balance CD, but because it's an irrecoverable date, we write the irrecoverable date on the credit side for us to balance James' account. So we record it here. 50. Then we can balance off our account. Right? Then we are now required to prepare the irrecoverable debt account, right? According to the principle of double entry, we have credited James's account with the irrecoverable date, right? Meaning to say, when we are recording in the irrecoverable data account, we are going to record on the debit side to complete double entry. So we are going to write which account? Correct. We are going to write James, right? The date is January 18. That's 50. Then we now need to make a closing transfer to the financial statements. In this case is the income statement, right? Irrecoverable date becomes an expense because if the customer fails to pay, then we are supposed to use our own resources to cover up for that amount that we didn't recover from our customers. So we are going to write income statement on the credit side of the irrecoverable data account, and we are supposed to record 50, right? We can now balance our irrecoverable data account, 50 here, 50 here. So we can say that irrecoverable debts are amounts that customers failed to pay despite the efforts made by the business to recover the amounts. Let's now look at how we record it in the income statement. The income statement has revenue, then cost of sales, then if we subtract, we have our gross profit. Then the gross profit has this amount. Then we are going to subtract expenses, and in this case, we have irrecoverable debts of 50. So this is how we treat irrecoverable debts in the books of accounts. Thank you very much. See you in our next lesson.